Mr. Burke's being interviewed.
Okay, we got enough to get started with. This is a committee of the whole for budget and finance overlaid with the administration summary. Administration summary on fund balance and current fiscal status. I think something along those lines. So, in terms of our budget and finance committee participation, it's fairly minimal. You have the floor for the full time. Excellent. So, do you want me to take attendance? Well, we don't have the clerical support, so I don't think it's anything on the record, so we'll just be duly informed. Thank you.
All right, well, I'll go ahead and get started. I'll start by sharing just the overarching themes of the presentation that you're about to hear. And that is in 2010, there was a real focus in the revenue area in terms of really trying to fine-tune our forecast and get a better handle on what our revenue numbers will be. So we'll show you the results of that and our historical trends. And additionally, in looking at revenues, we're going to spend a few slides today sharing with you some of the investment performance. And the reason for this is because about $20 to $25 million revenues in our funds are associated either directly or indirectly with the market and its performance. In regard to expenditures, we really want to emphasize and also congratulate our directors for their excellent fiscal management of expenditures. They have really been able to implement efficiencies and hold the line on spending and really evaluate what is critical in terms of spending to meet the mission of their departments. And then lastly, we'll bring it all together with the fund balance analysis. We'll share with you, where we are at the end of this year. And, I'll just say right off the bat, the excellent work that was done in both revenues and expenditures improved our financial condition significantly. And that will, of course, position us then to address the liabilities that we face in 2011 and 2012 that occurred in previous years. So with that, we'll move directly into a discussion of revenues. The historical revenue trends, as you can see, show an increase in revenues, and this is largely due to property tax increases over the years. However, I really would like to take this time to just quickly congratulate Dan Moore, our treasurer, and his team, because as you can see in the graphs, this is the first year that we have actually exceeded our revenues, actuals relative to our budget. In the past, revenues were always performed less than budget, and this year we've done a much better job in terms of fine-tuning the numbers and really getting in to understand the different components of our revenues. Overall, the average economy is recovering, and we saw that in our 2010 results. But also what is in our 2010 number is 4.6 million of TAPS recovery. And I'll go ahead and move to this next slide to explain the variance between the 2010 actual and the 2010 budget. On an overall basis, we were up by about $4 million. And this is largely due to the unexpected recovery that we got from the oil companies in regard to the property tax assessment associated with those assets for the Trans-Alaska Pipeline that reside in the municipality. We did provide a briefing on that towards the end of 2010. And what we are doing, I'll just jump ahead and show you the next slide here, is we have filed a motion to join some of the other municipalities in this case to escrow this $4.6 million in funds with the Superior Court here in the state of Alaska. And then what that would potentially do is if we would lose this case, because it is being appealed by the oil companies to the Alaska Supreme Court, it may potentially avoid us having to pay back the interest associated with this assessment. So we think it's a really wise move on our part to do that. As we get to the fund balance portion, then you will see that what we have done is we have taken this 4.6 and we have identified it as reserve meaning not available to spend. Back to the variance analysis. Also, what you can see is in 2010, our investments didn't perform in a manner that we had budgeted. At the end of the year, many of you may be aware the market did fall in November and December in the fixed income area, and we'll go into that and show you some detail around that. But what it resulted in is an unrealized loss of $3.3 million. And I want to emphasize the word unrealized because, as you know, we mark to market every single month. And wherever we are on December 31st is what gets recorded on the financials. Now, the market has rebounded some, in January, February, March. And so we're not exactly in that state. Well, we're not in that negative position currently. But at the end of the year, we were. Room tax revenues are up. Tobacco tax is up. And some of these other areas are down. But on an overall basis, we came in quite close to budget. So now we'll talk about some of the details associated with these revenues. This is a slide that addresses the hotel motel taxes. You can see the high was in 2008 in regard to actuals. We were at 22 million. 2009, we dropped as a result of the recession. And now we've started to recover in 2010 in regard to actuals. So we did, as an economy, do much better than what was predicted. If you recall, Julie over at ACBB, she actually had forecast a 10% over 2009 reduction in revenues in this area for 2010. So we did a lot better than what was forecasted, and we're hoping that this continues into 2011. In regard to tobacco tax, what you can see here is in 2010, our actual revenue numbers exceeded the trend, which is around 16.5 million a year. And we are attributing that to the change in the tax and considering that more tax avoidance behavior, where folks who smoke purchase a lot of cigarettes the last quarter of the year in anticipation of paying a higher tax in 2011. So as we go through our budget revisions for first quarter, we'll need to take that into consideration in regard to volume of sales. In regard to the APD revenues, here you can see, a pretty consistent trend, historical trend in regard to the revenues here, with the exception of 2008. You can see we did have a higher collection here, 8 million, in comparison to the trends, which is more 6.6, 6.2, 6.3. And this is largely due to the increased permanent fund dividend that was issued by the state of Alaska. So this account varies as the permanent fund dividend size does, because a lot of this is based on collections that we get directly as a result of fines and fees, and we can go to the permanent fund to collect some of that money. In regard to the construction industry, you can see that the actual revenue trends are pretty flat between 2008, 2009, 2010. It's in each year it is a little lower, actually in 2010 than what was budgeted, more significantly so in 8 and 9. We're really optimistic that this might turn around some, but at this point the trend will probably continue. This is a graph of Fund 181. And this is the building permit fund, and we just pointed this out because this is an area where there were some problems, significant problems in 2008, 2009, and the reduced revenues as well as the transfers out of this account into general government funds has caused this fund to go negative in regard to fund balance. All right, with that, we'll move on to investment performance. As I had mentioned earlier, there's, we are impacted by what goes on globally in regard to the revenues that we earn on our investments. In the municipal cash pool, it's like from 2 to 5 million a year, depending on interest rates and returns. The municipal trust fund, which is about 100 and some million, we issue about $5 to $7 million in dividends here, and that can vary depending on the value of that fund. And then also the big, large impact recently is the impact of the police retirement fund and the unfunded liability that caused us to have to pay $12 million in 2010 to that organization to help their unfunded situation. So this is why it's really important. If you look at the trends for the investment revenues, you can see that in 2010, we did come in under budget. As I had mentioned earlier, it was $3.3 million due to the unrealized losses in our cash pool. But we're getting closer. It's very difficult to predict our investments. However, it's something that we monitor very closely, and we are constantly looking at the results of investments, even mid-month before we get reports at the end of the month. And the reason is because we are staying on the pulse of these revenues so that we can position ourselves to make corrective changes to spending if we need to do it. We can't control what happens with the investment earnings, but we can control how we manage our expenditures. Also, the reason why it's really important for us to be looking at these and managing these is because our fund balance will help us get through times where our investment revenues don't generate the earnings that we have. So it's really important for us to keep the fund balance high so that we can offset any potential decreases in our investment accounts.
Lucinda, there's a question on that specifically, and I'm going to go ahead and let it go through. So thank you, Mr. Gutierrez.
You said we're getting closer with regard to the difference between budget and actual, but the gap has actually gotten bigger, 2010 versus 2009 between budget and actual, 3.3 versus $2.4 million difference.
Well,
we're slipping a little farther behind.
yeah, I guess I was looking more at.
Certainly, we're better than 2008.
It's extremely difficult to forecast the market. If we could,
you wouldn't be working here.
None of us would be working here.
Thank you.
Right.
Yeah.
The whole point is for everyone to understand that there is volatility in the market, and we can't control the earnings, but we can control how we react to it. And that is through management of expenditures.
Fair point.
And that's really.
And just one more point. If we had ended our year in October, we would have been on budget. November and December went off the cliff.
So if we'd ended 2008 in July, we would.
Well, I'm just saying that in a after 10 months of results, we were on budget. And with the final 2 months, it went off the cliff. So then it wasn't something we could predict or control. We didn't have time to really react to it either. So.
Well, and those that are interested at the assembly level, we're now seeing that more regularly and more accurately portrayed in those reports, and I'm pleased to get them. So thanks for keep doing them, even though it's not always great news. But thanks. Go ahead, Lucinda.
This is just a really high-level depiction of what is going on in the market. And you probably all know this, I won't spend a lot of time on this, but the whole point is that in the 2004 to 2006, the markets were relatively stable. And then if you look at the lower right-hand chart, you can see 2007 to current. It's become unstable, it's volatile, it's changing all the time. You can see, for example, with regard to T-bills in 2010, the average return there was 0.1%. So it's difficult for us to generate a lot of earnings off our cash pool when the market looks like this. And so it's just a point of reference and something for us to keep in mind as we think about investment earnings and its contribution to general government. Year to date, this year through March, equities, which are the top two bullets here, are performing well. Those, that's 2.5 months of return. But if you look down below, the bottom 4 bullets, that's our fixed income indexes, and those returns are very low. And we have budgeted $5 million in regard to investment earnings. And so it's something for us to be constantly monitoring and ensuring that we have tools in place to cover that if they don't come to fruition. So what I wanted to do here is just do a quick overview of the police and fire retirement system. And the reason is because in 2010, it was the first year that we made a $12 million contribution out of general government to that fund for the purpose of funding the unfunded portion of their liability. And what you can see from this graph is the impact of the market decline in 2008, from 2007 to 2008, and the 1231 value is what the actuarial report is based on, which determines then the amount of liability that is amortized over a period of time and contributed to this particular fund. The graph to the right shows the return. So as you can see, the return has gone up, the value of the fund has gone up, and our contribution will be going down from 12.2 down to 8.6. And we have the report for 2010, and we anticipate this contribution going down to $6 million in 2012. So it's a really good depiction of how the market, again, is impacting general government revenues.
Lucinda, on that topic, just one question I have. Is the actuarial accuracy, if you will, was that some of the mitigating factor? Did we miss it actuarially, or did we see a change in significant value? What was it?
I would say 90+% was really just market value.
Okay.
The actuarial report, we scrutinize it, we look at the methods that they use to calculate the unfunded liability. We're looking at salary increases, we're looking at the demographics of the pool.
Mr. Flynn has a question too.
It's really the market.
Thank you.
Lucinda, can you remind me what we anticipate our 2012 contribution being when we passed our 6-year plan?
8.6. And we just got the actuarial report.
So 2.4 delta.
Right.
Thank
But
you.
I'd like to point out something though. There is discussion at the police and fire retirement system about changing the amortization schedule and shortening it. Now that has not been passed by the board, but it is being discussed. A shortened schedule will actually increase the $6 million. And so we are evaluating that as a board to determine really what is the right thing to do for these retired police and firemen.
And so you increase by how much? Or they're not sure yet?
We don't know, because there's different types of
Different schedules you select.
schedules.
Okay.
And we've requested the actuary to provide us with multiple scenarios so that we can look to determine what is best for the system.
Mr. Honeman has a comment or question.
Actually, a disclosure, I'm actually a member of this police and fire retirement plan, and very blessed to be able to participate and have served. Could you elaborate just a bit? If this fund and this investment fund, I guess you'd say, is it pretty much performing to similar fashion of other funds, investments of the municipality, a little better, a little worse? I'm recognizing, of course, in retirement plans, you've got another complexity. You got the actuarial for, as was pointed out. The state, what I'm getting at here is the state kind of missed theirs. And I know there was a lawsuit to go back and recapture some funds where somebody missed that actuarial pretty poorly. But I guess I'll just my question is it doing about the same, better, a little worse than any other investment funds in the municipality?
I think it's performing quite well. We compare the performance of the fund to benchmarks depending on the type of asset allocation. So we have real estate investments, we have emerging markets, international funds, equities, different types of bonds, we're even moving into some land investments. As a result of that asset allocation mix, it's performing quite well. And I think it performs comparably to the MOA Trust. I mean, your return is a function of your asset allocation, because the more you are in equities, the higher the risk you take. Conversely, the higher the return you would expect. But this is really set up to be positioned to earn at a minimum 8% return so that we can develop the earnings to pay the retired members of our police and fire department.
And I just
I'm going to go ahead and just keep you moving, and then we're going to also pull the questions back to the end, so write them down from here on, because we need to get the meat of the facts, and then we also need to move to the summary. So, we've got about 35 minutes to do that, so not to be rude to anyone, but let's get you through your mission and get to the summary.
The point on this slide is about the MOA trust. I just thought it would be good for you to see the historical trend here, again, in regard to the market value associated with the trust. And then to the right indicates the earnings. And, as with the police and fire retirement system, we've rebounded, the market value's gone up. But Dan has done some analysis here to look long-term to see, what would it really take in terms of increased market value to increase the dividend to general government. And we're out there 10 plus years here. And so that's just something to note in regard to the dividend. We'll skip that slide and go to this one here. This is just some detail on the MOA cash pool that gives you some information that identifies how large the cash pool is. This is the value of the cash pool. And then the purple up and down line here represents the earnings. So you can see how volatile the earnings are. And then you can see what happened here at the end of 2010 that drove $3 million in unrealized losses. So we're monitoring this really closely, particularly where we are in early this quarter, because we needed to do a forecast. Third week in February, this number was negative. We were back down where we were at the end of December. And so it's just another indication of what we are doing in my group in terms of trying to closely manage and watch expenditures. Just another real quick slide here on the cash pool. As you know, we have deployed a strategy where we take our money and we place it out into the market in different durations. And the point of this is to get the most amount of return with the least amount of risk. And this is an analysis here of the difference of deploying that strategy versus just taking the money risk-free and putting it in a T-bill account. And over a period of time, particularly since the middle of 2009, we've earned an additional $38 million by deploying this investment strategy. So the whole point is it is sound, it's properly managed, and we're moving with it. Now moving on to expenditures, what we're showing here is the expenditure trend from 2006. And what you can see is from 2006, 2007, and 2008, we were increasing expenditures by about $30 million a year. In 2009 and 2010, that increase was significantly managed, and those numbers have dropped, and we've defied the trend, if you will. We've been able to do this through really strong fiscal management, getting our directors and managers to really look at expenditures, make sure that they're mission critical. But what is also noteworthy in terms of doing this is, we took on that additional $12 million for the police and fire retirement system to pay that in 2010, in addition to the increased union costs. So I think it's pretty remarkable to look at the results that were delivered in those 2 years relative to the trend that we were on. Okay. This graph provides a visual of the areas where we saved money through efficiencies, improved management of overtime, and just real close management of discretionary spending. And what it identifies is by department the savings, and then it differentiates between labor and non-labor. And so a lot of this has already been shared with you in the year-end report that we provided. So just thought it was a real good graphic depiction of the results that each department manager is delivering to the city.
And in some cases, of course, I mean, there's factors that are external, like in public works, you may have a smaller snow year or other weather-type factors. But for the most part, the managers did a tremendous job, particularly controlling overtime, and as Lucinda mentioned, kind of the non-discretionary spending. And we also, at the executive level, have a cost containment committee that scrutinizes all travel, personnel hire, and other expenses, and they've been very effective. And congratulate Cheryl and Larry and Lucinda and everybody that works on that to make sure that we stay on mission and under cost.
Okay, next is a discussion of fund balance. The slide everyone's been waiting for. If you'll see, what we're projecting, what we're showing here is the trends from 2007 to 2010. And as you can see, in 2007 and 2008, we were unable to meet the set-asides for our emergency rating, and in 2008, a portion of our 8.2% bond rating. In 2009, we were able to fully restore our fund balance to our bond requirements. I think we had $176,000 excess that was then redistributed during the first quarter budget revision. But then in 2010, this year, we've been able to deliver $11 million of unreserved fund balance, which is depicted here in the green, to the organization. And what this will do is will position us for some of the liabilities that we need to address in 2011. Also, what you can see graphically here is this orange box, which represents the reserve that we've set aside for the TAPS payment. The red and the blue depict the set-asides for the bonds and the emergency reserves. So we have a definite increase in our fund balance, which is a very good financial indicator for me, particularly when I'm talking with the rating agencies. It exhibits fiscal strength here at the municipality of Anchorage, and is viewed very, very positively. The next slide is the detailed numbers supporting the fund balance schedule. And I know this is a lot of numbers to put up here, but in your handout you can see them more individually. But the number to really focus on is the number that is shaded in yellow, and this is the unreserved number. So this represents the number that is available after we have set aside money for our bond ratings and our emergency reserves and our reserves for TAPS. For the 5 major funds, that's the $11.2 million that I had mentioned on the earlier slide. Looking to the right, what you can see here is Fund 181. 181 did end the year with a negative fund balance of $2.3 million, and this is even after we did some restoration of that fund at the end of 2010. The other general government funds, which includes the LRSAs, police and fire medical pre-funding, medical administration, funds that we can't really touch that are very specific for that fund, the balance is 6.4 for a total of 15 million. But the number that we all focus on is the 11 million, which is the 5 major funds. What I've also done on this slide is added a column for Fund 603. And Fund 603 is our health insurance fund. And the reason why it's here is because I wanted to point out that that fund ended in a negative fund balance at the end of 2010 by $3.7 million. And the reason for this is because claims in 2010 exceeded the premiums. And so as we looked at developing our budget going forward in 2011, we did go ahead and increase our health insurance premium. But what's important about this is that in looking at the 11.3 million, if we had been able to anticipate all these higher medical claims, the number would be reduced by the 3.6, so it would have been closer in an $8 million unreserved status. So that's something that we will need to deal with going forward, is this negative fund balance in Fund 603. Any questions on fund balance? All right. Oh, good.
How long will outstanding liabilities take?
Two slides.
Go ahead.
These are the liabilities that we are managing and watching and keeping a pulse on in our organization. The first one is, of course, the AWWU MUSA case. The liability, the potential liability, including interest, at the end of 2010 is $50 million. The RCA continually delays a ruling on this case. They've delayed it for 7 months now, and their new target for ruling on this case is May 9th. So at that point in time, we will know what their ruling is, and we will make suggestions and recommendations on how to proceed. It is significant and it's huge. The MLMP land payment, everyone is aware of that. Comes due in October. We paid down a portion of it at the end of 2010, and this is a one-time liability that we will need to pay off this year for $3.1 million. Yes?
Is there an account for potential state monies to help pay this payment? I know there's a request from the community council through their legislative body to...
There is not. Has not been incorporated in this. I was not aware that was happening, so thank you.
Thank you.
Get to work on that, make that happen. In regard to environmental liabilities, I know these have all been discussed in the past. What we've identified here are the amounts that we are actually accruing in the CAFR report in regard to each one of these individually. Reeve Boulevard, it's contaminated PCBs on the soils. We do plan to do a cleanup for that in the summer of this year, and the estimate is about $750,000. For Kincaid Park, this is the lead in the soils there. The number that we are accruing is the $907,000. And then additionally, we have approximately a $2.4 million cleanup liability for Peacock Cleaners. Also, it's important to note that we currently do not record anything on our financials in regard to leave for employees that has been accumulated but not taken. Currently, what we do is we just ask our department managers to basically absorb this. Sometimes they can, sometimes they can't. If they can't, we will do budget increases or come to you for an appropriation. Additionally, we have the funds that I mentioned earlier that are in a negative fund balance. That's Fund 181, $2.3 million, Fund 603, $3.6 million, Fund 602. It's actually 602, which is our risk department. The fund balance for that at the end of the year is fine. However, the claims exceeded the revenues that were generated, and as a result, by $2.3 million. So there will be an impact to the workers' comp rate going forward as a result of a higher claim factor historically. Also, we have the SWS closure liability. This is all Also very well documented in our CAFR report. The total liability at the end of 2010 for us to close that fund is 54 million. The percent complete relative to time is $20 million, and the cash set aside relative to that is 4.6 million. We were able to contribute an additional $2 million in 2010 to this fund. I would also like to point out that this list does not include the stuff that Dennis deals with on a day-to-day basis, which is all the legal liabilities. These are just the operational environmental liabilities in these funds. So it's really, the overall message here is we do have a reserve, an unreserved amount in fund balance, but for your consideration, we do have all these liabilities that we need to address and deal with in 2011 going forward.
Good. Thanks for the summary. And I just want to take 1 minute to explain where we're at in sort of our fiscal management as the Budget Finance Committee. We have a meeting next Tuesday, and then we'll have 2 meetings left to, depending on who's on the body, I suppose. We'll have 2 meetings left before we actually have to approve first quarter budget amendments. So what you're not seeing right now is sort of the anticipated way we're going to incorporate these into the budget amendments towards the end of April. So that was why we shortened the statement. It requires a lot of work, and I didn't think we needed to start to get into it. We're a month out, so to speak, but this gives us a fiscal snapshot, as well as next week we have approval on the school district budget, and sort of as you get your fiscal mind around it. We have about 17 minutes left, and there's 7 in the queue, so what I'm going to do is probably 3 or 4 minutes per each. Flynn, myself, LV, Johnson, Mike, Gutierrez, and Chris Birch so far in the queue. So Patrick, go ahead.
Yeah, I'll probably be real quick. First, you said that workers' comp claims exceeded revenues by 2.3 million, but it's written the comp claims increased by 2.3 million. Which is it?
Comp claims increased by 2.3 million over the prior year.
Okay, so it didn't exceed contributions that we made to that.
Right, if you recall, there was a appropriation done sometime in the fall to cover those expenditures.
Thank you. On the health insurance, my recollection was the reason we were increasing premiums was to resolve that negative balance. Will those increased premiums not do that this year?
Hopefully, but
Well, you never know.
I want to point out, we want to believe that 2010 was an anomaly.
Well, I'm sure that workforce is getting healthier every day.
Right, but Patrick, what I want to point out is if we did pick the right number, 23%, we still carry a $3.6 million negative fund balance.
Unless we exceed it.
Zero-sum
Right,
game.
understood.
Right, so we don't restore.
And the final thing, on the MUSA, have we given any thought, I mean, God bless the RCA. It might be more effective, I think, or to pursue a change in state statute that tells the RCA how to consider contributed plan rather than leave it up to their discretion. Have we pursued that in any way, shape, or form?
We have not. We have talked internally about talking to the governor about this government lawsuit that just moves dollars from one pocket to the other pocket between ratepayers and taxpayers. But what I've been told is that the governor tends to not want to get involved directly with these type of fair rate situations.
I'm not talking about getting the governor involved.
Well, I'm just saying we've looked at taking it to a higher level. And it's difficult to do because the is associated with RCA and RAPA.
All right, thank you, Mr. Chairman.
I have a couple questions on how you personally, as a CFO, handle the unrealized losses as opposed to realized losses, particularly in our investment pool. Is there ever an interest to move them? And maybe I'm naive in the accounting format that actually you go through, but when you post the unrealized loss concept, is there ever a day when you say we better book that loss, or how do you actually make the decision to do it?
Well, we book them monthly. We mark to market monthly.
So the technical speak, when you say it's an unrealized loss, that's not necessarily the way our financials will be dealt with come first quarter, you'll actually realize some of the loss on,
No, we record it in an account.
Yes.
That's titled unrealized loss, and then we have another account that says realized or unrealized gain on loss.
I got it. And that reconciles to the actual number at the end of April? Is that how you do it, or do you realize it at the end of December?
We realize it every single month.
Okay.
Just to clarify, realized gain or loss is a result of a investment security being sold. So you're locking into the gain or loss.
Yeah.
Unrealized is a paper, like just at a point in time, this is what the value is of what's on paper. But it's only until you sell that security, you actually realize a firm final number. So.
Well, I just want to know if there's a recognition that we need to, just take a one-time reset of that and hope the market does recover, but if it doesn't, we have to have a mechanism. But I'll talk a little bit more offline. When Fund 81 shows up short, so to speak, underfunded because of user fees, what's the mechanism? I mean, it seems like an obvious question, but the obvious answer isn't always that. We can continue to carry the loss on paper, but the actual cost of running the department and all the services we tender, how do we pay for that?
Well, it's an item that we've been discussing internally in regard to how do we address this negative fund balance. I mean, there are various ways to put more revenues into the account, which include potentially property tax revenues. We could zero it out, if you will, through this unreserved portion of our fund balance and get them back on even track. But the problem started back 2 or 3 years ago when money was taken from the account. At that point in time, there was plenty of money that would have covered the deficit that it exists today.
Is the cost of the department exceeding its revenues to run it?
It's about, I'd say it's about break even. I think it was about break even.
The one graph showed a couple $100,000 deficit still in that. I guess that's my gap closure there, is if we're going to continue to run negative, is there something we should do structurally or organizationally? And that would be just sort of the recognition that it exists. Thanks for the answer.
We're looking at it.
The other one is, you referenced some unaudited, and then you also talk about some hard number CAFR numbers. Have you guys tendered your formal management comments to the CAFR results yet?
We are in the process of developing that. The audit is not complete, and so until it's audited.
I understand. One of the things that caused me some concern sometime back, several years back, was when I actually got the CAFR delivered to me toward the end of May or June. Of course, the opportunity to do first quarter adjustments based on real numbers as they audit in that book caused me some angst. Mainly I saw the CAFR was what illustrated to me most of the fund balance stuff. Are you liable to see changes between now and April's decision-making timeframe on any of this stuff besides the investment pool that you gave us recognition on? Or when you start to see other things come in? I want to set my sights on the appropriation for the leftover budget monies, but how do I do that between now and April?
Yeah, it's always difficult because until the audit is complete, the numbers are real, they're not final. I would say from our perspective internally, the numbers are 99+% complete.
Yeah, barring any major surprises, and we're big enough, organization's big enough that there could be surprises,
Yeah.
These numbers are good. These are the numbers we submitted to the auditors.
And you'll obviously turn your first quarter budget amendments from the administration into us for review, and we'll just urge that when you have them ready to go. And it will probably be similar to some of the management comments you addressed, I would think. So we'll go from there, and hopefully that's earlier in April than later in April. Thank you. That's all I have. LV, great?
Great, Jackson.
Jackson, sorry.
Yeah.
I wrote LV and then I was going to say the rest of
Okay,
it.
thank you, Mr. Chairman. I just have one quick question on the environmental issue, because I know that there's some federal money for fix Peacock. Okay, because we have presentations at Community Council from HLB on that. Is there any federal money to fix the other two areas that you know of?
We put in a request to our federal delegation,
Excellent.
but the way Congress is moving right now with just continuing to reauthorize
Right.
existing
Right.
Legislation,
Right.
we're not hopeful that at least
Okay.
this year we're going to see.
Thank you, Mr.
anything.
Mayor, but at least the request is there.
Oh, yeah, absolutely.
Great, thank you. Thank you, Mr. Chairman.
Sure, Ms. Johnson.
There's one other solid waste service, actually, no, it's a HLB liability. And right now, I forgot what we called the recycling plant that was out beyond the airport. We had a contractor out there, and I know
Compost
it's,
facility?
huh?
The compost?
Yeah, and it had a name.
Regional compost.
Point Warren's out, there we go. Yeah. Thank gosh, we have collective memory. But, and I know that that's still in litigation, but I also feel that that's one of those liabilities that we need to start putting some kind of number on.
I'm not.
Dennis, can you speak to that?
Thank you, Assembly members. The litigation is ongoing. I believe they're scheduled for later this summer. Both sides are claiming damages in the millions. There's a lot yet to be done in terms of working out how much of those claims will actually get to trial and carry any weight. But I can give you a more detailed briefing if you'd like.
I mean, I almost think that we as a municipality should at least assess the cost of cleaning it up and note that as one of our liabilities.
That's one of the ones that falls under Dennis's executive session briefings because it is in litigation, but he
Right.
does have, as you know, a long list as well.
Yeah, right. Thank you.
Mike, go ahead.
So could you go back a slide? Refresh my memory. With regard to Reed Boulevard, and I apologize, maybe Mr. Wheeler can address this. Is this one that is currently in litigation, or are we? Okay.
Yes, sir.
Okay, then my question was if we intended to try to recover some of that money, so I presume that, yeah. And the other question about the accumulated leave and kind of booking that as a loss or a liability rather, I'm curious about that because it strikes me that those are hours that the employees would normally have worked if they didn't take the leave. So presumably it's in the department budget already. So why do we need them to take a sort of a double hit on that?
Now, this is leave that they've earned, they haven't taken.
Right.
And so if they, let's say they quit the company, they quit today, then we'd have to write them a check
I see.
for that untaken leave.
Okay. And we've
And so
increased
if
that
we-
significantly in the last couple of years, at least for our executives. Have we not?
That's uncashable.
Uncashable.
That's non-cashable. So
money involved.
there's no
Right,
money
cashable.
involved with that at all.
But presumably then they could use their non-cashable leave to take their vacations and save up their cashable leave so that when they do leave, then they take a big chunk with them.
There are rules associated with how much cashable leave that you can actually take and how much you have to actually use each year. And can you rattle those rules off? I think it's like 2 weeks.
You have to take 80 hours a year of cash leave.
So then does this $23 million figure accurately reflect that? Or is it actually higher than that?
That's the amount of leave owed to the employees at December 31st after all their hours have been taken for 2010. We don't book that at the fund level, but we do book it on our government-wide financials.
All right, thank you, Mr. Chairman.
Mr. Birch.
Yeah, I had a question on the environmental liabilities that are identified up there, I think Reed Boulevard, $750,000. Is that just to refresh my memory, was that a result of the Glen Square project and the was it I can't remember what the contaminant was, but it got somehow or another it got removed from the Glen.
It's PCBs, and they were moved from one site that was contaminated to another site, and then that site became contaminated.
Okay. So the contamination at Glen Square, is that basically because it got picked up and moved someplace else, it's gone? And that kind of begs the question, looking at some of the issues with Glen Square of late and the fact that the city had I guess we had an interest in it by virtue of the land that we, contributed to the program there, but is there any other liability associated with the Glen Square operation or kind of failing, if you will?
I'm not aware of any.
Okay. Thank you.
Ms. Oceander?
I have 2 questions. I think it's been almost 2 years now since the Assembly deferred awarding a contract for utilization of the methane landfill gas. And instead, the administration and the desire, I thought, was to go back, negotiate, and put out an RFP. When will we see something on that so we know? I mean, I'm really clueless in the status.
Sure. Well, as I understand, there were responses to the RFP, and there was a firm selected, and I think it's in negotiation right now. So but let me get the.
Could you just not at this time, but later, just give us an update on that? Because we anticipated some significant revenues from that, I can't remember the exact figures, but I'd like to get, anyway, an update. Second question or concern.
Go ahead and let him answer real quick, because
Assembly members, we're finalizing negotiations with Doyle on the contract with respect to the methane gas project at the landfill.
Well, what I'm interested in specifically is if you are anticipating a specific revenue dollar. That's what I'd like to know. And when it would come online.
You can answer that now, can't you? Cheryl, did we forecast revenues earned from the landfill gas sales in the 2011 budget?
I don't believe so, but we'll.
We forecast that there would be revenues
No,
earned. They
because
didn't
I
put it
asked
on.
it then, and it was not then,
Okay.
but I'm wondering when. That's all.
soon.
Soon.
Those things matter.
Assembly members,
let's
off
see,
the top of my head, my recollection is that the project is scoped to come online at the end of 2012, so the revenue projections will be tied to.
Okay, well, at some point, I just would like to get up on speed on that one. Second one is on this ML&P liability. From the beginning, I've heard that the intent was to resolve that through a land trade. And the last time I asked this, I was told there were ongoing discussions about that land trade. We haven't gotten any kind of an update. And I'd like to know if there's any feasibility in that and status.
The complications, of course, as always happens when you're trying to work out complicated land trades. The portion of property that ML&P wanted to acquire next to their existing site on the Glen Highway has a federal reverter on it. And so that became much more complicated. And again, Dennis, if you want to expand on that, we didn't have the ability to make a simple trade because of the federal restriction.
The last time I asked Posey, he said that they had some flexibility on what land they would take.
Well, there was some additional land to the east of his facility, but the price is astronomical as far as I'm concerned.
Okay, well, I think the Assembly would like a briefing on that one, too. I know particularly those of us that go to Muldoon, at least occasionally, would like to know.
And I'll just lead into the fact that I think, Barbara, April 12th is when we're going to see another presentation on formal budget amendments presented. We have a work session that we've since canceled on the 1st and moved to April 12th to get the administration.
April 12th is a meeting. April 15th,
For the
work session.
work session. April 15th will be the formal presentation of the first quarter budget adjustments presented by the administration, and then we'll spend the next 10 or 12 days up through April 26th doing ours, and hopefully come to agreement on the meeting of April 26th. So that's all I have. It's 1 o'clock and we should be closed.